50% US tariffs kick in on metals as the trade war moves up another gear. The US tariff rate on most imported steel and aluminium hit 50% today, the deadline by which the Trump administration has told trading partners to deliver their best offer to avoid crippling tariffs kicking back in on the 9th of July. With just 5 weeks to go before that deadline, countries who have been hoping the market was right that, as the TACO acronym has it, Trump always chickens out, are starting to worry he may be serious. Altaf Kassam is Europe Head of Investment Strategy and Research at State Street Global Advisors. Altaf, these steel tariffs on their own are quite damaging to Europe, aren't they?
Yeah, I mean, without everything else that's going on, this is a big worry because one of the sectors that we were hoping would start to outperform, given the spending that's coming out of Germany on defense in particular, would be in manufacturing and automotives. And it feels like this is a direct attack on those sectors themselves.
Business growth in the Eurozone stalled in May, we found out in this morning's data. How worried should investors be about Eurozone growth with all these tariff worries?
Yeah, it definitely adds another layer of worry. The Eurozone has had a growth problem for a while, and the release of the debt brake in Germany felt like it could be helping to alleviate some of those growth problems, but you can see that that's going to take time and they haven't gone away. So it's definitely something that the ECB will be considering on Thursday.
Of course, we do expect a rate cut tomorrow, but what kind of forward guidance do you think we'll hear?
Yeah, I think it's really important to listen carefully now to the Lagarde press conference. Until these tariffs were increased from the US on metals, it felt like things were a little bit in the balance and the ECB might slow down its pace of cutting because it has cut 8 times in a row now. But if the tariffs continue as they're stated, and if growth continues to look weak, I think that keeps the door very open for the ECB to keep cutting rates, and that's what they'll talk about.
Do you think European policymakers are now preparing themselves for the US administration to be very serious about bringing back those much higher tariffs?
It does feel like, the market behaved as if the 90-day reprieve was a complete let-off, and we'd never hear about tariffs again. The news from this morning has certainly brought them back into the headlines. And I do believe that the ECB in particular will be thinking about that as a persistent external shock, which is something they've talked about as guiding their policy moves.
The euro is increasingly attracting investors who want to move capital out of the US. Last week, Christine Lagarde was talking about the global euro as an alternative to the dollar. How are you expecting this to play out in currency markets?
I mean, we do believe that there should be a medium-term decline in the dollar and that the euro might be one of the beneficiaries, but the key phrase there is medium-term. It's going to take a while, and there's still a huge amount of dollar assets in reserves, central banks, and so on. So at the margins, I think it will be positive for the euro, negative for the dollar, but that is going to play out over months and years and not in a few weeks.
Do you think the ECB should be worrying that the euro could rise too high for Europe's exporters?
Again, I think that's a long way away, and I think exporters have a lot more to worry about basically from the tariffs, which are much bigger and much more clear and present danger than any appreciation in the euro. We've been much higher before. They've been able to handle it, so I don't think that's the nail in the coffin. But it's another thing to worry about as well.
Do you think then that the dollar will recover despite this level of uncertainty in US policy?
As I said, yeah, we do think the dollar's due for a medium-term decline. It feels like right now, a lot of the selling that we've seen has paused for a bit. And I think investors are again trying to work out what's going to happen with these tariff negotiations. But over the medium term, we still do think the dollar should weaken and could go down by as much as 10%, although FX markets tend to overshoot, so it could move a lot more.
That was Altaf Kassam of State Street Global Advisors. Don't forget, you can watch more